Hey traders, it's John Fortune here with this week's weekly Forex forecast. Hope you're having a fantastic weekend as usual. Last week was a bit of a slow week because we had non-farm payrolls week, the first week of the month. And the markets, you can see here with the DXY, just kind of consolidated. There weren't too many opportunities last week. And that's why in these videos, I always say during non-farm payrolls week, it's a good idea to take slightly less trades. But the good news is with that week out of the way, it does set the stage for the rest of the month. And I do think there are some really good opportunities coming up now next week. Okay, so quick look at the economic calendar, and last week's data is very important out of the US because this is going to give you an idea of what the Federal Reserve are going to do next and how this is going to affect the dollar. The first thing to notice, and we're going to look at the US specifically just first, is the manufacturing PMIs and also the services PMI. And the manufacturing PMI came out better than expected, but not as good as last time. So this is kind of slightly a good result. It's still above 50. It's not fantastic, but it's not bad. It's not in recessionary territory below 50. And we also had the services PMI that came out last week. And this actually beat expectations, and it beat what it was previously in the previous month from 55.3 up to 56.7. So that's actually a pretty decent reading. Again, not fantastic. It's not up in the high 50s or early 60s, but it is actually not too bad, and especially when you consider the services sector of the US is the largest sector in the US. So that's the first piece of the puzzle to consider, because yes, the Federal Reserve does tend to work on lagging indicators such as CPI and also unemployment, but the Federal Reserve are not stupid. They understand and are aware of the ISM reports. It actually gives the Fed a little bit more of a green light to get more aggressive and more hawkish. And don't forget, this is a Federal Reserve that have recently said they're going to be data dependent. So that's the first piece of the puzzle to consider, and suggesting that the Federal Reserve are going to be more aggressive, more hawkish, which of course is bullish for the dollar. The second piece is the jobs data that came out on Friday. Now, we had a big upside surprise, 528,000 jobs added. And you could look at this and say, well, this is a sign that the US economy is doing very well. But if you dig a bit deeper, and as our American friends would like to say, if you look under the hood, you will see that the labor force participation rate has been falling since March. Now, what this tells you is the labor force participation rate is the number of people in the US who are actively seeking work or in work, and the number of people who are actively seeking work or in work is decreasing. And so if you have the pool or the labor force decreasing, the number of people actively searching or in work decreasing, but you have more jobs added, well, how does this make sense? Well, what this is suggesting and what this means is that the declining pool of people looking for work or in work are actually taking more and more jobs. And this, of course, is to offset the wealth destruction brought about by the recent inflation. So when you look a bit deeper, this is not what you would expect to see in a healthy economy. People, or less and less people, taking more jobs in order to offset high levels of inflation is not a healthy thing for an economy. But if you look at the headline number of 528, this is the third piece of significant data last week, which is going to give the Federal Reserve a green light to be more hawkish, more aggressive with their monetary policy. And when you combine everything we've just discussed, it's suggesting that the Fed is actually going to get more aggressive, more hawkish into actually not a very healthy economy. And that greatly increases the risk of the Federal Reserve breaking something. And the final things to note are the raise of interest rates out of Australia, nothing out of the ordinary. What was significant last week was out of the UK, there was a raising of interest rates, but the Bank of England stated that they see a recession coming in the fourth quarter of this year to last 5 consecutive quarters. What the Bank of England forecasting is a recession essentially on a par with 2008. The great financial crisis. Why? Because that also lasted 5 consecutive quarters in the UK. And they're forecasting that in conjunction with 13% inflation. So a real serious case of stagflation being projected by the Bank of England in the UK, and this is going to put downward pressure on the pound. And last but not least is the employment data out of Canada. It wasn't fantastic, and we also had the Ivy PMI going into recessionary territory at 49.6. And both of these pieces of data out of Canada actually helped reduce the score in the 1 month forward-looking scorecards, and CAD shorts are going to be something I'm going to be looking at next week. And the only thing to note this week is the CPI data coming out of the US, very important on Wednesday. There's a good chance that the dollar pairs correct or do nothing into Wednesday, and then you start to get the opportunities from Wednesday onwards. So we're going to look at the dollar pairs, but just bear this in mind, likely going to get opportunities if they do arise from Wednesday onwards. Okay, so let's have a look at the scorecards then for the coming week, and you can see there was a lot going on last week. The scores did really change up. And again, like I said, just sets the stage for the next few weeks. The main thing we're looking for here on a 1 month forward-looking probability basis is not just the strongest versus the weakest, but primarily the currencies in the strong section of the scorecards getting stronger and weaker currencies on a 1 month forward-looking basis getting weaker. So we do have the US dollar increasing its score. In a nominal sense, you could say it's not especially bullish because this is just bullish to neutral. This is bullish, this is strong bullish bias, and this is getting to the point where it's overbought. You should start to look at booking profits. And so the dollar is kind of bullish to neutral. And when we look at the technicals, this does suggest we may be coming towards the end of the recent correction, but it's not very bullish as of yet. So we are going to be looking at dollar long plays next week, but they will be from Wednesday onwards after the CPI data. The euro is weak, but it's slightly strengthening, so not a fantastic signal. The pound is weak and it's strengthening, not a fantastic signal. The Swiss franc is strong, but it's weakening, not a fantastic signal. The JPY is strong and it is getting stronger. So absolutely we're going to be focusing on JPY long positions. This was actually a currency we were looking at being long in last week's video, which worked really well at the beginning of the week. And then it snapped back because we had such a strong rally in the Japanese yen. And the Japanese yen, you can see here, last week was doing this. So Japanese yen long positions, and this is the first time this year that the Japanese yen has actually been on the left-hand side of the scorecards here. So JPY long positions, I am going to be interested in. The Canadian dollar is weak, and although it's only bearish to neutral, it is actually getting weaker. So CAD shorts, absolutely, I'm going to be focusing on. The Australian dollar is still kind of bullish to neutral and not really moving. So not really a big fan of the Aussie next week. And the New Zealand dollar, which is fantastic, is yes, bearish to neutral, but it is coming also down here. So really this tells me that next week, my main trading plan is going to be the New Zealand dollar to the short side versus the Swiss franc. So New Zealand franc to the downside. I'm also going to be looking at CAD franc to the downside. Going to be looking at euro and pound franc to the downside, because although they're strengthening a little bit, they are actually still bearish on a 1 month forward looking basis. And I'm also going to be interested in the New Zealand yen to the downside, CAD yen to the downside. Going to be looking also at pound and euro yen to the downside. And the final thing I'm going to be looking at next week will be the New Zealand dollar, the Canadian dollar, the euro and the pound, all shorts against the US dollar, but from Wednesday onwards. Okay, so let's have a quick look at the individual currencies before moving on to the markets, which form my trading plan next week. The DXY is still in an overall uptrend, and I highlighted last week, it looks like we had a rally, a shallow correction in form, almost a bit like a wedge. And then we had another rally, and now we've got a deep correction. So you've got the law of alternation, shallow correction, deep correction. Very often, wave 2 is deep, and then wave 4 is shallow. But in this case, we have a deep correction here, and it does look like this correction is coming towards an end, and we are set for new highs in the DXY. If we drop down onto the 4-hour chart, you can see here that we do have the makings of an inverse head and shoulders, and we're right at the breakout level. This always happens going into very big pieces of data, and we have the CPI data. So I am looking further advances, but don't be surprised if it just corrects and then breaks through on CPI and sets up like this into new highs. So bear that in mind. The DXY and the DXY pairs may just correct into Wednesday's CPI data and do nothing, and then you start to get the move afterwards. If the CPI data comes out and the DXY sells off hard and we come down and make new lows, I'm not going to be looking at trading the DXY. That will come out of my trading plan, and we'll reassess it next Saturday with updated scores. Next is the euro. Now look at the euro. The euro really just hasn't gone anywhere. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Really for 2 to 3 trading weeks, this has just corrected. This is not going to go on forever. We are set for the next move in the euro, and in all likelihood, that's going to be to the downside. I don't usually drop down on these markets, the individual currencies, but I'm dropping down here just to show you we kind of have the reverse setup in the euro. It does also look like we are forming a head and shoulders in this case, and if we correct and then break through here, this is the opportunity to start to look for shorts once again in the euro. If you get involved perhaps before Wednesday, this just continues to correct, but if you get involved anywhere up in this area, you run the risk of it just continuing to chop. So look for the breakout of the head and shoulders below the 1.01550, and that is the opportunity to look for further shorts in the euro and therefore euro pairs down to 0.99610. If CPI comes out hot on Wednesday, expect to see the US dollar rally. Next is the pound. We've started to break out of this correction now. You can see we do have some nice momentum here in this daily candle. So I do think we're probably going to pull back and start the decline now next week in the pound. And this is suggestive as well of the next up leg in the dollar starting next week. So I am interested in pound shorts. Next is the Swiss franc. The Swiss franc, as I've noted in previous videos, is not super bullish, but it is relative to the other currencies bullish, and I am interested in franc long positions this week. I wouldn't be surprised to see this come up and take out the 1.06250. Because the Swiss franc is bullish but getting slightly weaker in the scorecards, I am not prioritizing them. I actually prefer the yen pairs as my number one play next week, and then after the yen pairs, I think the Swiss franc pairs are the second best play. Next is the Japanese yen. We are still in an overall downtrend, but we may be coming back to test the major breakout level over here of the 0.007945. So I am bullish on the Japanese yen going into this week. I am looking further advances to the upside. The next target is the 0.007811. And last week we had such an explosive move in the first 2 days of the week that the market had to mean revert, had to correct. But as it currently stands, I'm just simply viewing this, as I said, as a mean reversion. Just basically, the yen got too extended at the beginning of last week, and it had to come back and reset itself. And I am looking further advances this week. Next is the CAD. The CAD gapped down, you can see here at the end of the week, and we had a really nice breakout. This is actually on lower time frame, a head and shoulders breakout as well. And this is right at previous resistance highlighted. And I do think now we're seeing some momentum here. And let me just drop down to show you this on a 4-hour chart. You can see the breakout with momentum. Any pullback in this area in the Canadian dollar is absolutely a high probability trading opportunity for further declines to the downside. And CAD shorts outside of New Zealand shorts are one of my favorite plays next week. Next is the Aussie. It's also technically starting to break down, and I am looking potentially for further declines, but in the 1 month forward looking scores, it is actually slightly better than a lot of the other currencies at +1. And so I'm not really interested in being long the Aussie, but I'm also not really interested in being short. The Aussie is off the table for me for the time being. And finally, the New Zealand dollar is setting up as a good short going into this week. Technically, we are starting to break down. And due to data which came out last week, input into the scorecards, the New Zealand dollar actually went from slightly bullish to bearish, and it had a net change of -2, which was actually the biggest net change of all the currencies last week. So that is why that is my favorite short heading into this week, followed by the CAD. And New Zealand shorts are absolutely something I'm going to be paying attention to next week. Okay, so let's have a look at the markets themselves heading into next week. Last week, crude oil was a great short. In a week where the markets didn't really move too much, some of the commodities, especially crude oil, was a great short, and this really made the week last week. We came down, and on the 3rd, I actually tweeted out that crude oil looked set to sell off fairly hard, and we did sell off over 7% since I tweeted that out, and we went straight to the target from there. Going into this week, I am looking for further declines in crude oil. Any pullback in this market, and I'd like to see it come away from the target first, but any pullback is simply viewed as another opportunity to look for bearish reversals down to the 87.73. I do really like crude oil heading into next week. So the first currency pair we're going to look at is New Zealand yen. This market sold off really hard at the beginning of last week, took out the target and bounced. And that was, as I said, it came down too hard, and this was an overextension and basically had to mean revert. But the target in New Zealand yen was pretty much the low for the week. As we've already started to correct in this market, I'm now looking for any reversal or any break to the downside. That is going to be the opportunity to start to look for shorts once again. First of all, down to the previous lows. That can be your first more conservative target. But over the next couple of weeks, I am looking for further declines into the 80.15. Next is CAD yen. Last week we were looking for yen strength plays, so that would be CAD yen to the downside, for example, and we did have a really strong sell-off, but it all happened within the first 2 days, and then we snapped back for the rest of the week. I am now looking, because we've had this correction, I am now looking for further declines in CAD yen. Any break to the downside is viewed as an opportunity to look for shorts. First of all, down to the previous lows once again, and then on to the 100.19. Those are my two top pairs heading into next week, which I think offer us the best chance to make money next week in Forex. Euro yen, another market which took out the target and bounced last week. I am just treating this as a correction, and I am looking for further declines. The fact this corrected very sharp is actually great news, because it does mean that when this starts to break lower, this does have a very nice distance down to the previous lows and then onto the 132.77. So not highlighted in gold, because I do prefer the two commodity currencies here better or more versus the yen. However, don't sleep on euro yen and pound yen to the downside, because I think these markets also decline. Next is pound yen. We did come and take out the target before bouncing last week. We already started to sell off quite hard last week from the Bank of England meeting because of what we discussed at the beginning of the video, which is those 5 consecutive quarters of forecasted recession, which is going to put downward pressure on the pound. And we snapped back a lot of this down move, but as it currently stands, I'm just viewing this now as an opportunity to start to look for bearish reversals in this market next week. And if we start to break down, I'm going to look for further declines down towards the previous lows and then onto the 158.07. So I do really like the yen pairs next week. Next is New Zealand franc. This is my third favorite pair heading into next week. We have been looking further declines, but you can see this kind of just chopped around. And again, non-farm payrolls week didn't do much for us last week. I am still looking further declines, and you can see this is setting up a head and shoulders, which is a head and shoulders in a downtrend and in a correction. So this is exactly where you want to see head and shoulders reversals. So any pullback next week is simply an opportunity to look for bearish setups down towards the next key of support to the downside, the 0.5904. Next is CAD franc. Any continued pullback in this market next week is simply viewed as an opportunity, once again, to look for bearish reversals, bearish breakouts. I'm going to be looking at initiating shorts down towards the next key of support to the downside, 0.7364. And if we can break through here, I'd like to see if we can break through here down towards 0.73100. So New Zealand yen, CAD yen, New Zealand franc, and CAD franc are my 4 top markets that I'm going to be focused on next week. Next is Euro franc. This is a market been shorting to the downside, and last week we just actually had an inside week on non-farm payrolls week, and I'm just viewing this merely as a correction for further decline. So again, not highlighted in gold just because I wanted to narrow down the top 4, but don't sleep on Euro franc and pound franc, because again, I think just like these two here, Euro yen and pound yen, we're going to see declines in these markets. So any continued correction is simply viewed as an opportunity to look for bearish breakouts down towards 0.9653. And the final franc pair here is pound franc, and pound franc, this chart looks very squashed because I've had to zoom out a little bit to show you the next level, because there is really just a gap between here, because the last time the market traversed these levels there was a crash in the pound versus the franc. So there's nothing but air below the 1.1496, and as I've said in previous videos, although we've just been correcting, if it does break this level it could come down fairly quickly. So as you can currently see, we've started to break out in pound franc of this previous correction. So any continued pullback in this area is simply viewed as an opportunity to look for shorts into the 1.1496. And if we get down to here, I will be keeping my eye on to see if I can trail this to get a break with momentum through the 1.1496 and down towards the 1.1119. It's not going to come down to here next week, but I would at least like to start to see some break with momentum below this level, and then in subsequent weeks we could be coming down to the 1.11190. And finally, the dollar pairs, starting with New Zealand dollar. In blue here, the dollar pairs, just to remind you, we have the CPI data. We're also breaking out of a head and shoulders, as you can see here in New Zealand dollar. So look for a break with momentum down here, perhaps on the CPI data itself, and then any pullback is the opportunity to look for shorts into the 0.6015. Next is US dollar CAD, already broken out of an inverse head and shoulders with momentum, treating this as an opportunity for any pullback in this area to look for bullish reversals. I'm going to be looking up towards the 1.3203. Euro dollar, again, just reflecting what we already looked at in the Euro index essentially, but we have this head and shoulders reversal, and I would like to see it come and break this level here. Once it breaks that, look for a break with momentum, and then you should start to see the market flagging, and that will be your opportunity to look for shorts into the 0.9927. And the final Forex pair here is pound dollar. We've had a deep correction reflecting what we looked at in the DXY index itself. And that's fantastic because now we're starting to break out. We have a lot of distance down towards not just the previous low, but the next target. And so any pullback next week is simply viewed as an opportunity to look for further declines in this market down towards the 1.1715. And just think about this fundamentally. We have a Federal Reserve in the US which is getting hawkish, which is data dependent, and the data which is coming out is actually quite good. So they're more likely to get even more hawkish, and compare that with the central banks who, generally speaking, are also data dependent. In Canada, for example, who are getting poor data. In the UK, who are going to be seeing poor data. So there is really a fundamental discrepancy now between how the central bank of the US is likely to act going forwards, i.e. they're likely to get more hawkish, versus other central banks who are likely to be less hawkish as they see negative data coming in. Okay, so wrapping up the video then with gold, silver and Bitcoin, starting with the gold-silver ratio. The gold-silver ratio is neither here nor there really, so not a huge bias for silver or gold one way or the other. Does look like, because we have momentum, this does look like it's a flag, and I do think we could actually come down, maybe test the lows before heading up. So maybe a slightly bearish bias on gold versus silver, but I don't have a very strong bias in terms of gold or silver. Next is gold. I've zoomed out here. I'll zoom in a little bit more in a second, but you can see we have tested the previous low. And in last week's video, we're not going to go through the same stuff again, but in stocks and everything else, I did discuss the idea of some risk on coming into the markets, which was likely to see gold, silver, Bitcoin testing the previous lows. And then we start to roll over as the dollar corrects, and then the dollar rallies higher. We start to see gold coming down, silver coming down, Bitcoin coming down, and also stocks coming down. But I did earmark the 1850 in the VIX as the key level to start to watch for stocks to roll over, which we have not got to just yet. So if you want to know more about how I think risk on could turn into risk off, you can go and watch last week's video. In terms of gold, we're sitting right at the underside, but the uptrend or the near-term correction, this is an uptrend, but it's a correction. This is the overall trend. This is the corrective trend. I would like to see either a head and shoulders perhaps set up like this, or you could treat this as somewhat, not really, because we're starting to break a little bit higher over here. Either way, look for the market to come and break down with momentum. Once you see momentum coming in, that's your sign. You can start to look for any pullbacks and shorts down to the previous lows and then onto the 1633.70. Not highlighted as one of the best because we're still kind of correcting, and the dollar has not yet really reversed either, and we're only bullish to neutral as it currently stands in scorecards. Next is silver, also tested, and we didn't even close above the previous low in the overall downtrend, which again we looked at in last week's video. I said look for a test of these for it to start to roll over. We have started to roll over. Perhaps it comes back up before CPI, and then look for this to break down again with momentum. Any pullback in this market, therefore, is simply an opportunity to look further declines down to the previous lows and then onto the 17.63. And last but not least, we have Bitcoin. Bitcoin couldn't even manage to come back and test the previous low in the overall downtrend, as you can see here. That actually shows significant weakness, let's say, relative to even gold and silver. So heading into this week, I am still looking for further declines in Bitcoin, but at the moment it's still a bit corrective. What I'd like to see is perhaps a little bit more of a correction and then a breakdown with momentum. Notice how this is momentum, this is momentum, this is momentum, this is corrective, this is corrective. So I'd like to see this breaking down with momentum and then get corrective, and that would be your sign to start to look for shorts down to the 16.492. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.